Are you thinking of buying a rental property? In this video, I'm going to teach you how to compute the rate of return or ROI on this potential rental property that you're thinking of purchasing. It sounds complicated, the term ROI, but it's actually pretty straightforward. If you're thinking about putting tens of thousands of dollars towards this real estate investment, you might want to know first whether or not this rental property is a good investment to begin with. We are going to go to calculator.net and type in rental property calculator. And we are gonna input a whole bunch of numbers in here in order to compute the ROI or rate of return on your rental property. Don't worry, I'm gonna explain every single detail. Now, before we move forward, we need to find a rental property example. So we're gonna go to Zillow.com, and if you live in Arlington, Virginia, let's see what comes up. This looks like a pretty decent condo to consider. So we're gonna go ahead and get the information on this lovely 3-bedroom and 2-bath condo in Arlington. It actually looks pretty nice. And 385,000. So we are going to input the purchase price first. Usually you will want to have a 20% down payment, so you are not paying PMI or private mortgage insurance. And so 20%, that's around $77,000 that you need to come up with. Interest rate, in order to estimate the current interest rate at the time you're buying, I usually go to Freddie Mac. And it's gonna show you the rate that you get. If you're buying a residential property, investment properties you'll usually have to pay maybe 0.5% or 0.75% more than these rates. So for our purposes, 30-year rates right now are going at 2.78%. I'm just gonna assume 3.25% in here over 30 years. Closing costs is usually 3% of the purchase price. So if our purchase price is $385K times 3%, that's $11,500. I am just gonna assume no repairs needed because the condo looks pretty new, right? Looks super nice here. Kitchen, bedroom. If you are the type of person who wants to buy condos for cheap and then you're just gonna fix it up, then you just input how much you'll end up repairing it, and then what you think the value of the house might be after you repair it. Let's say after that, you might say it's gonna be worth $425,000. So in this example, we're not going to assume any repairs. Now, the second section of this rental property calculator in order to compute the ROI of your real estate investment are the expenses. So property taxes is a big one. So usually it's around 1% of the value of your property. It's going to depend on your state. If you live in DC, it's less than that. It's 0.85%. Insurance, it's going to range for a couple of hundred to maybe $1,200 a year. So we'll just assume $800 for now. HOA fee, this is a big one. Obviously, if it's a single family detached, then you are not paying any HOA fees. Since we are looking at a condo, there will be HOA fees in here. And let's go ahead and look for it. Here it is. It's $708 per month. It's pretty steep, but we are going to input that. So $708 per month times 12 is around $8,500. So you need to be very careful. Usually you're tempted to just type in the monthly one, but remember it's asking for annual. So make sure you input annual cost of your HOA. Otherwise, it's going to throw off your calculations. Maintenance, some people forget this when you're making calculations, but things do break down when you own a rental property. HVAC, water heater, If you're buying a single family detached roof, replacing the roof is a big expense. Usually they recommend 1% of the value of your home when you're estimating the maintenance costs. For our purposes, it's a condo, so it's going to be less than that. So I'm just going to assume maybe $2,500 a year. And to be conservative, I'm just going to assume it all will increase around 3% a year. So that's the expenses part. Now let's go to how much money we're going to bring in order to compute the ROI on this rental property. Monthly rent is a main driver of ROI. So we want to estimate it smartly. To begin with, let's go to rentometer.com. I'm going to copy and paste the address in here. And it's going to give us the rental income prices in the area, which is pretty cool. So I'm just going to assume a number in here. It's not that important. What we're after is the rental income in the area, which it looks like based on this address, it's around $2,500. All right, so we're going to input that in here. It's monthly rent, $2,500. I'm going to assume here 2%, which is what tenants are usually expecting each year. And vacancy rate is 5%. That's what typically I assume. That's around 2 to 2.5 weeks of vacancy over a year, which is the amount of time that you might need to look for another tenant if your tenant leaves. Management fee. Here's something that you need to think about. Are you going to do this on your own? Which means you'll have to find a tenant. You'll have to find people to repair stuff that breaks down in the house, or will you hire a property manager, which usually costs around 8%, could be as high as 10%. That's actually the price that one of our clients currently pay their property manager. At District Capital, we actually have connections with good property managers that we recommend to our clients. So that is the income assumptions. Now, the last set of assumptions is the selling price. Usually I am a little bit conservative on this, so I assume 2% per year, which historically speaking, housing prices have increased by the rate of inflation. And so in the Federal Reserve is assuming right now a rate of inflation of around 2%, maybe above that. So that's why I want to assume that 2 or 2.5%. You might be tempted to assume more than that, because you might say, oh, according to Google, housing prices for the past 10 years have increased by 5%, so I should assume 5%. That's, I think, a very dangerous assumption. It might not match reality. Maybe you'll be lucky and it'll be increased by 5% a year, but I tend to follow what the studies say, which is the inflation rate. Might hold it for 20 years. It's really up to you. Cost to sell is typically 6%. You'll have to pay commission on your realtor and buyers when it's time for you to sell. So there we have all our assumptions, and we're gonna now click calculate and see what is our ROI. In this example, it's telling us the ROI is 5.69% per year. IRR is the same as ROI. It stands for internal rate of return. So I want you to focus mainly on this number and just forget about the rest. And what does this mean, 5.69%? Well, ask yourself, what is the alternative? If you had $77,000 in cash, which is your down payment, if you invested it in the stock market, how much would you make? Well, when we assume retirement projections for our clients, assuming 100% stock portfolio, we're actually assuming around 6% per year on the average for stocks right now. And you might ask yourself, is it worth all the trouble to make the same amount of money when you buy this rental property, when you can just ask your financial advisor what to buy, and a few clicks away, it's done. But you might think about, oh, maybe I want an investment that is not very volatile, and that's gonna add some diversification to my investment portfolio. So it's really up to you, but you wanna just compare what is the alternative and whether or not it's worth your time. One last thing that I wanna point out in the results of our rental property ROI is the cash flow. You can see in here that you actually have negative cash flow in this example. A lot of YouTube videos that you might watch on rental property, they're gonna highlight passive income, but you really only get passive income once your mortgage is paid off. In this example, we're assuming that you got a 20% mortgage and you're paying principal and interest, taxes and insurance and all of that. So in this example, you're actually down $5,500 per year. So that's just something to keep in mind.